Competitive advantage is their OCS organ medical device. So their device actually is a lot different than the past. Organs were transported with cold storage, basically under ice. And this can be pretty bad for the organ, and it damages the organ because it's not like a natural environment. So what they built inside their medical device is they make the heart continue beating under normal temperature conditions, and the lungs, they breathe on their own within the warm environment. So instead of being under ice, they have the heart in a normal environment, which helps keep the organ alive for longer. And this is very important for organ success whenever they transplant these organs. Yeah, look at that. That's pretty freaking cool, right? Oh my gosh. I'm also a nurse, so this stuff doesn't really freak me out, but I think that this could be an 8-bagger. And I'm going to share with you my discounted cash flow model. Now that we're getting towards the end of this video, yeah, they have like 22 airplanes. Everything is vertically integrated. So this really caught my eye, and it's one of my biggest holdings. Like, I just bought some more at the current price, $70. And there was some insider buying. The CEO bought some. The reason why it tanked, let's go to my Plus EV bag holder website. So we can see that over the past 3 years, it's down 22%. The past year, it's down 35%. We saw some insider buying from the CEO in 2025 at $117. He bought $3 million worth of stock in TransMedics. And we can see that the revenue growth rate has been absolutely insane, 88% revenue growth. And then if we scroll down, they are profitable. You see those yellow bars are net income. So 200 million in net income, market cap 2.4 billion. So PE ratio of 14. And this is you're getting a great moat company here. You see the margins just going up, and then you see them flatlining right here. The most recent Q1, we see that the operating margins went down by 10%. So they went from 18% down to 8%. That's the reason why the stock dropped 35%. And we can see like the aircraft 22. Let's go ahead and keep looking at the balance sheet here. Net debt kicked up. So the bears say, airplanes are really high CapEx. That is a risk. Airplanes are just hard to get a good return on investment. Like Warren Buffett hates airplanes. But every single organ that they transplant is like $100 something thousand. So that's like pretty insane, right? That's some profitable cargo. Some historical financials, you can see this absolute insane revenue growth. For 2026, they're expected to get 20 to 25% revenue growth. So this shows that increased SG&A and increased R&D cost. We see that's up 45%, up 41% year over year. So basically, they started acquiring these airplanes in 2023, and this is part of their moat building process, because other medical device companies, they don't have this logistics system, and this is just building a really durable moat, in my opinion. The 2026 reiterated guidance is 20 to 25% revenue growth, and in 2028, I found that the CEO said that operating margins could become 30%. So this is really possible for it to become an 8-bagger. As you can see from my discounted cash flow model. For my revenue growth, I put 17%, operating margins 30%, and then a discount rate of 10%. Free cash flow margin, I just kept the same, but in reality, I feel like it could increase. If it's at 30%, that shit's gonna become like 25%. So their EV to EBIT, I'm giving them more credit than Wall Street is. I'm thinking that they could have a really durable moat, and like who's gonna break that moat? Who's gonna have that training system, that vertically integrated organ procurement and then organ transplant system? So I give them 45, but let's say if it's 30, it's still a 6-bagger. So let's go ahead and change that right back to 45. For the base case, I put 10% revenue growth and then 18% operating margin. So remember in 2025, they showed that they could have an 18% operating margin. So this is a fairly fair base case, and I kept Free cash flow margins the same, and in EV to EBIT, I kept it roughly the same. So that would be a 2-bagger or a 19% return. And the bear case, I put 5% revenue growth and 8% operating margins. So that's just keeping Q1 numbers the same, and you would become a huge bag holder. So this stock is risky, but I'm also a nurse, so I think that this stock does have really good potential because of the way they're disrupting with the devices. It makes way more sense, because if you're having a cold organ, it damages the organ for sure. It's called cold ischemia, basically lack of blood flow to the organ. Anyways, let's go ahead. Anything else I want to hit on? So I want to talk about the kidney re-ramp. So the kidney re-ramp, that's expected to hit in 2027. The kidney device still needs to be approved by the FDA. It's going to be around 2027 to 2028 when we start seeing that FDA approval. And kidneys are actually the most transplanted organ, and they're also a durable organ. So they really built their moat right now under the liver revenue, having really good outcomes with liver, heart, and lungs. So now that they have kidneys, reignite the growth. So that's why I think that this could be a freaking 8-bagger. We can see that the liver revenue is almost like 75% of the total revenues, which is crazy. So once kidneys come online, dude, the revenue growth is gonna be crazy. But yeah, I'm really excited for this company. Operating margins you can see right here. All right, let's finish this little intro video. We see some nurse taking some blood from the organ. Latest lactate is posted, continues to trend down, excellent. Okay, cool. Yeah, guys, I'm gonna apply to freaking TransMedics. Anything else we want to hit on? Look at all these locations. 17 regional hubs across the U.S. Logistics 100% dedicated to organ transplant missions, ready to mobilize at any moment's notice. Growing transplant volumes 2 to 3x in the U.S. for select transport systems. 95% organ utilization. Highest rates of donor organ utilization for organs placed on OCS that are ultimately accepted for transplant, with excellent post-transplant clinical outcomes. Flexible procedure times. Provides the highest quality of service to transplant recipients. So I think organ donations and recipients are awesome because it saves so many people's lives. So I feel comfortable putting my money in this company, and it makes me feel good that I'm supporting something that helps save people. We can look at Ben Askren. This is like an example of how crazy a good transplant outcome is. You can see he actually just finished a wrestling competition, and this was him after getting a lung transplant, and look at him now. Like, that's a huge transformation. And so this is my blended IRR versus entry price graph. It's, if you drag your cursor across the screen, this shows different investment rated returns based on different prices. So let's say if you buy at $50 and the bear case happens, you'd be down 15% on your money. But if you bought at $50, the bull case would be 64% IRR. Let's say by the time you watch this video, it's at $100. You could see that the base case, you would get 10% IRR, and your bull case would be 41%. So then I have the probabilities of each of these happening. Remember, let's get that out of there. At the current price, it shows 121% upside. So a 4-bagger with all of these probabilities accounted for. So let's say I just think that they are gonna absolutely kill it. I'm bullish on them. Let's say 50% this happens, 25% this happens. Then you get a 5-bagger return, which is pretty cool. What, that's supposed to be 25. Yeah, 5-bagger. That's my freaking discounted cash flow model right there. If you like this video, check out ADT stock. I just made a video on that.